So we'll do this again. Can we give a warm welcome to Syed Faraz Anwer? Thank you.
Thank you.
Thank you very much. Okay, thank you. Go ahead.
Sure. So what Nehal was whispering in my ears is that I've got 15 minutes. So I will be mindful of the time which has been assigned to me. First of all, thank you very much, each one of you, who have been here very patiently listening to what we have been deliberating upon a while ago. Special thanks to Mr. Amin Ibrahim for inviting me and asking me to come over and make this presentation and moderate certain sessions. Credit goes to State Bank of Pakistan for have always been forthcoming in terms of supporting the digital agenda within Pakistan. And also my thanks to all of my colleagues who have been forthcoming in making this digital landscape disruptive as much as possible in the last several years. So thank you very much, each one of you. So in the interest of time, I am going to set the platform right for what I'm going to talk about. And then if time permits, we may take few questions around my thoughts on how should banks create and then obviously implement a sustainable digital strategy. So first things first, let me share some of the important global insights which will hopefully be kind of eye-openers for us as to where we stand in terms of global pace of transformation and what fundamental steps we need to take to accelerate our pace of progression. So this is what it is. To start off, let's just first understand what this chart means. This is about the financial, this is about not the financial inclusion percentage. This is about digital penetration. So essentially, it is about the number of transactions that are done using electronic and predominantly mobile channels. So this is not the West. We're talking about some of the countries in emerging Asia. So if we rate ourselves somewhere here, which is 10%, and if we benchmark ourselves to countries such as Philippines, India, Thailand, Malaysia, and Indonesia, then we start thinking around, well, we're not that bad because we are like 10% as opposed to India, which is 18%. But then you would have to see the CAGR of India, cumulative aggregate growth. That has been phenomenal. And one of the major initiatives that India has taken is introducing interoperable unified payment platform. So essentially, this stat is going to go exponentially high in the next 1 or 2 years. So as against 10%, which is Pakistan, India is at 18%, and it is projected to get to 35% in the next 3 years. That's a sizable difference that will now be created if we do not act fast. Only in relation to electronic channel integration and interactions. So let's see what is happening in the world. What is the destination model that we have to follow, and how much time we have in terms of getting to that destination model. So globally, there are banks which are opening up themselves and creating new ecosystems for their customers. They are improving customer experience, and most importantly, they are launching portals which are customer friendly. So they are interacting, collaborating with fintechs, telcos, and other e-commerce retailers, and they are opening up themselves through APIs, and they are also launching portals for customer convenience. So blockchain. Now, whenever we talk about blockchain in Pakistan, we come up with arguments such as there is no legal framework, no one else in the world does it, no one else in the world is doing it. But the statement of fact is that there are banks and fintechs which are experimenting blockchain technologies for trade-based solutions. Now, the third and the most important statistics that I'm going to share with you, or the fact that I'm going to share with you, is the use of smartphone technology. And the smartphone advanced technologies such as wearable, branded mobile wallets, and mobile wallets from the retailers and banks. So this is going to change the landscape of the market at large. And then another important fact, these banks are big banks, and these banks are thinking along the lines of using blockchain technologies to automate remittances using SWIFT as channel. This is in the experimentation phase. And I was discussing that with Hosam a while ago, and we were talking about what do we say about blockchain implementation and usage in Pakistan. So the test cases or the use cases are there. So let me just use this so that I've got all the slides in front of me. Look at the demand that is now being created within China and emerging Asia. So 30.9% is the cumulative growth that they are witnessing in mobile financial services or non-cash transactions. Now let's just go and talk about some of the banks which are doing some of the important digital banking or mobile financial services work. These two are the banks, Buddy Bank, and then we've got another bank which is M Bank. Buddy Bank is an Italian bank. It is the brand, the digital brand for UniCredit. That is the only iPhone bank available 24/7 to its customers. Only iPhone bank in the world, which is downloadable for iPhone. M Bank is a bank which is a success story in terms of digital transformation. How? M Bank started off with a traditional bank. It created a digital subsidiary, and that digital subsidiary swallowed the parent in 10 years of operations. So we have got a number of success stories. Now, talking about open banking platform, after PSD2 regulations being introduced in European Union, we are seeing a number of trends within the European Union in the UK banks to open up themselves for competition and for product co-creation. So these 3 to 4 banks are now very quickly trying to adopt open banking platforms. Now, talking about some of the important purpose-built apps. Now, what do you mean by purpose-built apps? These are apps which are customizable by customers. So the customer does have the flexibility to choose whatever he wants to choose. And we have got wide variety of banks over here which can do this work, including the likes of Citibank, Deutsche Bank, Chase, BBVA, and DBS. And then this trend is not just there in the West. So it started off with Eastern Europe. It is now gradually being adopted by EU and UK as a whole, and now it is going to Middle East. So we've got the example of one of the finest, one of the best Middle East digital banks, which is Emirates NBD, and the brand is Live. And then we've got certain examples of the benefits that the banks have been able to achieve by doing digital transformation. For example, HSBC managed to save around £5 billion through their digital innovation and transformation programs. Talking about Barclays, the extent to which they interact with customers is phenomenal. So as compared to that, where do we sit? Where do we stand in Pakistan? For the purpose of doing my analytics, I have picked up 5 main transaction types that happen more frequently within Pakistan, of which we have got the data. 3.4 million accounts were opened last year by the banking industry in Pakistan. And these are the statistics for a number of other types of transactions that we saw. For example, debit cards issued or pay orders issued or checkbooks issued and fund transfer. Now these are simplistic customer interactions. All of these are simplistic customer interactions. Now look at the cost or the range of cost that banks traditionally used to spend or are spending or are incurring in each of these customer interactions. 4,000 rupees per individual account, 800 rupees per cards issued. And when you multiply that with the number that we have just put in here, this is quite an exponential cost. This goes into billions of rupees of cost incurred by banks. Now imagine transitioning that volume from branch channels or brick and mortar channels to the electronic or mobile channels. 10-20% increment is going to save the banking industry a very reasonable or a handsome amount of money. And this is where we are when we compare ourselves with international statistics. So in Pakistan, we've got 60% customer interactions done with branches. Elsewhere, we've got 60% done through mobile banking. So it's like one face, the other face. In the world, we've got 20% usage of ATMs for withdrawals, and then 10% usage for call centers, and then 10% for mobile and e-channels. So in a nutshell, that 10% that I told you about in the first slide is this. As against that 10%, globally we've got 60%, and as against that 60%, globally we've got only 10%. So this is the topic that we discussed a while ago also. For example, we are seeing an increasing trend in Pakistan when we talk about interactions of customers with electronic channels such as internet or mobile, and there is a bit of an increase in branch also, but mostly internet is taking the shape. But when we talk about the opportunity is immense. How many accounts we're talking about? 49 million. And how many internet banking users we have? 2.347 million. And how many mobile banking users? 2.5 million. So this entire gap is for us to tap. And by the way, if I can tell you that interesting statistics as to how many times these internet banking users and mobile banking users on an average interact per year, you will be very surprised. So the statistics show that it is in the range of tens per year. Average customer interaction on mobile channels and on internet channels is average per year interaction 10 times. So there is something somewhere that needs to be fixed. Now, important is the cash in circulation ratio. Now, when we compare that with GDP, if you talk about, say, like UK, so we can take that as an exception because obviously UK is a much more advanced and country operating in the West. We've got 3% there. In Turkey, we've got 13%. In India, we've got 13%. In Pakistan, we've got 37%. And my colleague Faraz Anwer and a couple of other gentlemen spoke very clearly about what sort of regulatory initiatives government needs to take in order to ensure that this cash in circulation ratio gets decreased. So there are two ways in which you do mobile banking or digital banking in Pakistan. First is obviously talking about reducing cash and making people included in the financial system. Second is providing your customers seamless experience that is cost effective and revenue focused for your own selves. So every digital banking proposition has to be based on commercial values besides customer experience values. So these are the ways in which the banks in the world are digitizing themselves. So Irfan Saab has mentioned very specifically about creation of a digital subsidiary. So as long as there are, I would say, supporting regulations available from the State Bank of Pakistan in terms of creation of digital subsidiary and their governance, their operations, their licensing, I think there is going to be more encouragement for the banks to follow this route. Why? Is because of the cultural impediments, they would probably want to follow this. This is essentially going to probably significantly increase the pace of their transformation. But on the other hand, this is actually going to pose a lot of other challenges, such as shared services, cost economy, profit sharing, loss sharing, etc., etc. So therefore, in the world, we've got three models on an overall basis. First is digitize internally without a brand. Second is digitize internally, but with a brand that is registered. And maybe in the future, think about spinning off that brand and create a subsidiary out of that brand. And till the time the brand is on, you follow the regulatory sandbox concept, which is that it is subjected to a closer scrutiny by State Bank of Pakistan before it is commercially launched. And after it gets matured for a particular period of time, you then start to have transition from a digital brand to a digital subsidiary. So therefore, you can have a digital subsidiary at the first stage, or you can have a digital brand subsequently getting spun off in the form of a digital subsidiary. Now this is extremely important. Is transportation, and you've got different brands over here. Transportation, communication, housing, health, travel, my money. And I've put in, based on my initial thoughts, as to what kind of collaboration we should expect with various entities in the digital landscape in terms of banks and other ecosystem retailers, coordination and cooperation. Banks opening up their APIs to these institutions. But please remember, you can have data breaches. I got an email from Kareem yesterday that, well, not my account, but in fact, almost a number of accounts have been hacked. And this has been the case with Equifax, which had been the largest credit rating agency, or the data providers in the world. That happened with UniCredit. That happened with Telco Bank. That happened with Tesco Bank. That happened with a lot of institutions. You have to be mindful when you open up yourself with the banks. Nehal, I'll take a couple of minutes. So, you're usual, no? So this is the last slide that I'm going to share with you. Yeah, so this is the maturity ladder for banks. Mobile apps are like this right now, limited service push. In the midterm, you can expect a cost-driven service push when certain more services are added to mobile menu. Revenue-driven partner products is the one in which we are going to collaborate with the other ecosystem providers. Fourth is advisory-driven, innovative, customer-centric approach, wherein people are going to have customizable solutions, and there you will need a number of different dependencies. So this is the maturity progression that we would like to see happening within Pakistan, and I'm expecting that banks are going to take reasonable time, not a lot of time, in terms of progressing in a transition manner from one to the fourth of the maturity destinations. So thank you very much, Nehal, for allowing me time to share my thoughts on this. Thanks a lot.